people seem to have seized on is, okay, so come in about a week's time or so, the last FOMC of the year, they're going to go 50. They're going to start dialing it back. And the market just, it seemed to me as though the market was hearing what it wanted to hear. Because what was lost in the price action and also in the commentary was, hey, he also said the terminal rate is going to be substantially higher than you think. And this is not the first time he said that, but why are people forgetting it?
Yeah, that's right. Well, I was watching that live here at S&P headquarters. And right, when Chair Powell started to say that, well, we might be building a case for a slower rate rise, maybe as early as December, which is going to be 50 rather than 75, you can see the market shoot up and yields plummet. 5 minutes later, he said, well, that doesn't necessarily mean we're finished and the terminal rate may be higher than you think. We're going to get the new dot plots in a couple of weeks when the Fed meets again. But I think you're right in the sense that the market heard what they wanted to hear. Maybe one way to interpret that is we've been in kind of panic mode, right, with central banks for the last 6 months or so, because it's pretty clear that most central banks have been seriously behind the curve. In the case of the Fed, we had 75 basis hikes in a row, which we haven't seen for quite some time. And I think just the maybe a little bit of relief that the Fed may be slowing down the pace of rate increases, and maybe 75 is not the new 25 after all, and we could get to a more normal-looking rate path. Maybe that's part of the optimism. But Chairman Powell was pretty clear. There's still a ways to go. We think the Fed's going to end up kind of 5-ish, maybe a bit more as the terminal rate in this cycle.
Yeah, people talking 5 to 5.25.
Still a ways to go, but he's not going to over-tighten. Do you think that is the central message from Chair Powell?
Well, he doesn't want to over-tighten. I think given what we've seen over the last year or so, and remember, this time last year, there was still a big debate as to whether all of this was transitory or persistent inflation. We know how that one came out, but I think given the history of the last 12 months and most central banks were very late to start raising rates, I think central banks may be leaning on the side of being tougher rather than looser. So I think even if we've got a baseline scenario of the Fed going 5.25, we're probably leaning a bit higher on the distribution there. They're going to try to be a bit tougher given what happened rather than a bit looser.